So, what does it take for the United States to basically hit the delete button on a foreign bank? Well, today we're breaking down how a small private Swiss bank ended up staring down the barrel of the world's most powerful financial weapon, a tool that could literally wipe it off the map.
At the heart of this whole thing is a really extreme move. The U.S. Treasury is actually threatening to cut a Swiss bank off from the U.S. dollar completely. Now, this isn't just a slap on the wrist or a fine, it's one of the most powerful non-military weapons in America's arsenal. And that's the question, right? This isn't some giant global bank we're talking about. It's a private firm in Zurich. So what on earth could it have done to trigger what people are calling a financial death penalty? Let's dive into the allegations.
Okay, first things first, let's meet the bank at the center of this storm, MB Merchant Bank.
So, who exactly is MBER? Well, they're pretty new on the block, founded back in 2018. They're based in Zurich and sell themselves as a bank for entrepreneurs. And here's an interesting detail. While it's mostly Swiss-owned, it does have minority shareholders from Asia and the Middle East, which kind of hints at its global business focus.
All right, let's get to the core of it. The $100 million allegations coming straight from the U.S. Treasury.
The number at the center of all this is just huge, over $100 million. The Treasury is alleging that MBER funneled at least that much money through the U.S. financial system on behalf of some, let's just say, very questionable clients.
And who are we talking about? Well, the U.S. claims it's a laundry list of some of the most heavily sanctioned groups on the planet. Iran's Islamic Revolutionary Guard Corps, that's the IRGC, and its elite Quds Force. Plus, add in Russian money laundering networks and corruption tied to Venezuela. This is serious stuff.
And you know, the U.S. Treasury is not being subtle about this at all. A top official put out this statement, basically saying they're going to use the full force of our authorities. That is a very clear warning shot, not just to MBR, but to the entire industry.
So this begs the question, how can the U.S. possibly do this to a bank in Switzerland? Well, that brings us to what's known as the dollar weapon.
The secret sauce behind all this power is something called a correspondent account. See, for any foreign bank to do business in US dollars, it has to have a special account with the US bank. Think of it like a passport. If you don't have that passport, you're not getting into the US dollar ecosystem, which is pretty much the backbone of global finance.
The process itself is basically a financial chokehold. First, the Treasury's anti-money laundering unit, known as FinCEN, proposes a new rule. If that rule gets finalized, all U.S. banks are legally forbidden from giving MBR that passport account. And just like that, the bank is completely locked out of the U.S. dollar system.
And listen, this is not just some theoretical threat. We have seen this exact playbook before. Back in 2018, a Latvian bank called ABLV faced almost identical accusations from the US. And the outcome? The bank was forced to shut down entirely. So for MBR, the stakes really could not be higher.
But what about Switzerland? What are they doing about all this? Let's take a look at how their own financial regulator, FINMA, fits into the picture.
Well, here's where it gets kind of interesting. Switzerland's own regulator, FINMA, had actually already investigated MBER and made a ruling. But, and this is a big but, the bank appealed. That puts the whole Swiss ruling on ice. It's not legally binding right now. So in the meantime, FINMA has just put a monitor inside the bank to keep an eye on things.
And make no mistake, these two investigations aren't happening in separate worlds. The Swiss regulator, FINMA, has publicly confirmed that they are in direct contact with America's FinCEN. This is absolutely a coordinated international affair.
Okay, so let's zoom out. Why should we care about a small Swiss bank? Well, because this story is so much bigger than just MBER. This is a global warning shot.
So what are the big takeaways here? First, it's a massive reminder of the raw power the US dollar holds as a geopolitical tool. Second, it shows that it doesn't matter how big you are or where you are, if your bank touches the dollar system, you're in play. This is a huge warning to every bank everywhere. And finally, it's not a done deal just yet. There's a 30-day public comment period before this all becomes final.
So, the Treasury has fired its biggest financial cannon. And by targeting a bank in the heart of Europe's famously secretive banking world, it leaves everyone in global finance asking one simple, chilling question. Who's next?